Michael Saylor says Bitcoin is going to go to $13 million per Bitcoin. At first, I thought it was crazy and very unrealistic. But then I found one chart that completely changed my mind. His prediction isn't some type of fantasy. It's based on a very conservative model that will change the way how you see Bitcoin over the next 20 years. And by the end of this video, despite all the current fear in the market, it's going to shift your mindset and it will make you want to go on a Bitcoin buying spree. And let's get right into it. So Michael Saylor's Bitcoin playbook and why you should steal it. So by now, you've probably heard the name Michael Saylor and you've seen this face. His name and his personality has almost become synonymous to the Bitcoin community. He's almost like the public spokesman of the Bitcoin community. And right now, he is one of the biggest Bitcoin holders with the company that he is running. So how did Michael Saylor manage to do all of this? What is his storyline? And what is he currently predicting with Bitcoin? Well, Michael Saylor founded this company called MicroStrategy. And MicroStrategy is a business intelligence software. Basically, it helped companies to make sense of all of the data that they generated within their company. And it was a very successful company, but yeah, I would say it wasn't exceptional, right? They did really well in the dot-com boom because everything that had to do with the internet and SaaS and those kind of things made a very big run up. So during the dot-com boom, MicroStrategy stock shot up and then it never really recovered until they did something very massive. They actually were one of the first few companies that adopted Bitcoin as a strategic reserve asset, meaning that they did a very big analysis and they looked at all of the different options that they had available to deploy their excess cash, their excess liquidity. So they could put it in gold, in real estate, in treasury bonds, in other stocks. And after doing a very extensive analysis, they realized that there's no other better alternative to put your money in than Bitcoin. So they actually announced that to the rest of the world, like, hey, we are going to be a Bitcoin treasury company. All of the excess liquidity that we have available, we are going to allocate it to buying Bitcoin. And last year, or actually this year, MicroStrategy rebranded itself to Strategy, to signal to the rest of the world that from now onwards, they only have one more strategy. And that strategy is to accumulate as much Bitcoin as possible by, using the profit of their underlying business, by raising money on the debt and the equity market, basically coming up with all different kinds of financial instruments in order to raise money to buy more Bitcoin. And I've covered many of these Bitcoin buying sprees that Michael Saylor and MicroStrategy has gone on my YouTube channel. I always think it's super inspiring and interesting to see how they are devising these creative financial instruments to raise a bunch of money, literally billions. So they have implemented this Bitcoin strategy now since 2020. And here on this chart, you see in the past 4 years, all of these yellow dots are all of the moments that MicroStrategy bought Bitcoin. And you see they buy Bitcoin when the market goes up and they buy Bitcoin when the market goes down. Actually, it's like how every single person should DCA Bitcoin. Basically, they just keep doing it consistently. The whole thing about investing is it's just like going to the gym. You will not get ripped or shredded or build your dream body by just going to the gym once and lift a weight. No, you need to do it by being consistent, all right? By going to the gym 4, 5, 6 times per day, by keeping track of your food, your diet, and then you're going to be building your dream body. Well, the same thing is true with investing. If you want to build wealth, then you need to be consistent over time. And MicroStrategy understands this, and they understand the power of just accumulating more Bitcoin over time, because according to them and according to their research, and I agree with this perspective, there is no better alternative than Bitcoin right now to put your money in. I see Bitcoin as a asymmetric asset, an asymmetric investment. If you study some of the billionaires in the world right now that have generated their wealth with investing, they will all talk about the need to invest in asymmetrical investments. What are asymmetrical investments? Well, asymmetrical investments are investments that have a low risk profile and a high return profile. For example, right now, Bitcoin has so much adoption, all right? Countries are embracing Bitcoin, pension funds are buying up Bitcoin, banks are integrating Bitcoin into their services, and publicly traded companies are buying up Bitcoin. The average investor is becoming more and more educated about Bitcoin. And, you know, with all of that adoption, sure, Bitcoin can drop 20%, 30%, 40%, 50%, but probably it will never go to zero. Whereas most altcoins or even mid-cap to small-cap stocks on the stock market, they can go to zero. In fact, there is a very big likelihood that over time, over the long term, they will go to zero. In particularly, 95% of most altcoins will never survive the next bull market. And even if you're investing in the winners of the previous bull market, there's a very big likelihood that they won't even be in the top 10 of the next bull market. Why? Because in the crypto market, there's only 3 scarce resources. Number 1, attention. Number 2, money. And number 3 is talented developers. And all of those 3 resources cycle to the next hyped up project. And that's why projects within the crypto space have a very short lifespan, because people are not loyal, the investors are not loyal, the eyeballs are not loyal. They just hop to the next new shiny hyped up project. Whereas Bitcoin has been around now for, what is it, since 2009. So 16 years, more or less. So, and during those 16 years, it has shown such an insane track record. For the past decade, what was it, 2010 to 2020, Bitcoin generated 230% annual returns. There's no other investment class out there which generated those returns within the same period. All right, and by buying up so much Bitcoin, MicroStrategy has put itself on top of the chart of Bitcoin holders. So here you see MicroStrategy right now holds around 528,000 Bitcoin with a value, I believe, of $82 billion. Yeah. Oh, no, sorry. $42 billion. $42 billion. That's how much Bitcoin they're currently holding. And they have actually outperformed many other companies on the stock market. I don't know why. Yeah, here. So they've actually outperformed every other company on the stock market. So since MicroStrategy adopted this Bitcoin strategic reserve, they generated 2,100% returns in the past 4 years. If you compare it to NVIDIA, and NVIDIA was one of the darlings of the past few years, you know, they are driving the AI revolution, but not even NVIDIA, outperformed MicroStrategy. Tesla had a 167% return, Google 108%, Meta 108%, IBIT, which is the BlackRock spot ETF, 87%, Microsoft 83%, Apple. So these are all over a period of 4 years. But as you can see, MicroStrategy way outperformed all of those other companies. And Michael Saylor knows exactly what he is doing, because he studied this asset class so much. I know Michael Saylor is a highly educated person. He went to MIT, Massachusetts Institute of Technology, one of the best universities in the world. He's a very, analytical person, engineering-minded. Trust me, he has done a very deep analysis on all of this. And he came out with his prediction that he believes that 1 Bitcoin is going to go to $13 million in the next 20 years. And I'm going to explain in this video how he got to that price prediction. Because what I mentioned in my introduction, this is not just some kind of, fluffy or whatever BS prediction. It is based on some kind of probability model, which we're going to discuss. So this isn't a random number, which I mentioned. It's based on a real model. It takes into account the historical Bitcoin growth and a shrinking supply. So in case you don't know, there will only ever be 21 million Bitcoin that will ever be in circulation. There's around, 1 million Bitcoin that still need to be mined. And of the 20 million or 19 million Bitcoin that are already in circulation, a lot of that supply is being held by individuals and entities that don't really want to sell it. So while demand is going up and available supply is shrinking, that generally tends to mean that the prices of an asset tend to go up. So let's walk through Saylor's model. So here you see this chart on my screen. Saylor's valuation model predicts $13 million per Bitcoin. Waiting for this image to, yeah, there we go. So here you see this model. So let's briefly explain this chart because we're going to go through a few different alternative versions of this chart. So here on the timeline, you see 2024 all the way up to 2045. So what Saylor is basically assuming is that Bitcoin has generated insane returns. What I mentioned before, between 2010 and 2020, it was the best performing asset class out there. It was even named the best asset class of a decade because it generated 230% annualized returns. Now, as an asset class matures, we can expect some kind of diminishing returns. So that slowly over time, the returns that an asset class is generating is slowly decreasing over time. Why? Well, think of Amazon stock, for example. In the beginning, Amazon stock was just as volatile as Bitcoin is right now. But over time, as more and more investors started to understand Amazon, there were more buyers that were willing to buy Amazon and also more buyers that were willing to buy up the dip if Amazon stock dipped. And similarly with Bitcoin, now we're seeing new players enter the market. We see large asset managers, pension funds, banks, publicly traded companies. So there's more educated and sophisticated buyers on the market. And as a result, we can probably expect the dips to be a little bit lower because there's more buying pressure at every single price. So as a result, Michael Saylor expects that the returns of Bitcoin will drop just a little bit every single year to the point where we hit a flat growth rate of 20%. So if you've been investing, you know that the rule of thumb is that the S&P 500 over the long term tends to grow with 7 to 10% per year. He believes Bitcoin will grow much faster. Why? Because people need to have a hedge against inflation, because central banks around the world are printing trillions of dollars and they need to have some kind of way to protect themselves. So the elite and the sophisticated investors will allocate a certain portion of their funds to Bitcoin. So here in this chart, let me wait for it to go sharp. Yeah, so here in this chart, you actually see the performance of Bitcoin since 2015. So now we're talking about the actual performance of Bitcoin plotted. And you see that the performance of Bitcoin tends to go down a little bit with every cycle as Bitcoin matures. And that's exactly what we discussed. That's what we call diminishing returns. And then here is where Saylor's assumptions start to kick in. So he expects that the returns will diminish a little bit over time until we hit a flat growth rate of 20% per year. Now, if this scenario plays out, then we can see a Bitcoin that's worth around $13 million per Bitcoin in the next 20 years. So here you see the price increase from 2024, so 70K per Bitcoin, then 2025, 100K, 2026, 140K, 2027, 210, 2031, 800,000, 2032, 1 million per Bitcoin, 2035, 2 million per Bitcoin, and we can continue from there onwards to the point where 1 Bitcoin could be worth $13 million per Bitcoin. So we still have some more content to discuss in this video, but now that we have discussed Saylor's prediction model, I'm really curious to hear your thoughts in the comments below. Do you believe that this could be a realistic path for Bitcoin's price in the next 20 years? Type yes in the comments below if you do believe that this is realistic, and type no if you don't believe that this is realistic, because we're also going to discuss a few alternative scenarios. So yeah, let's wait for this image to sharpen up. Yeah. So here are altered assumptions. So Michael Saylor makes another prediction model. He's saying that the growth rate starts at 60%, just which is a little bit higher than the previous model. So he's saying the growth rate starts at 60%, and then the growth rate decays exponentially with 10% per year. So every single year it drops with 10%. So we started with 60%, 10% minus 60 is 54%, and we will keep on dropping until we hit this terminal growth rate of 20%, which here is a flat red line. And if this model plays out, then we should see roughly around, $12.7 million per Bitcoin in the next 20 years, which would be really nice if that happens, of course. Here you see it again in his other model. So here you see the real growth rate of Bitcoin over the past 10 years. And here you see the assumed growth rates, which is basically the same as this chart. But what you should know is, again, we're following this exponential price appreciation to the point that we hit around $12.7 million per Bitcoin. Now, there's another scenario. So again, Saylor starts with a 60% growth rate. So that's basically, a 60% growth rate. And what if that decreases with 10%? Until we hit a terminal growth rate, which is a bottom. So the minimum growth rate that we will experience with Bitcoin is 10%. So again, you see this decline in the growth rate over time as Bitcoin matures, and then we hit this 10% growth rate. And if that scenario plays out, then again, you see this exponential appreciation of Bitcoin over time, and that brings us somewhere around $6.8 million per Bitcoin. Now that you've heard this scenario, what do you think is more likely? Scenario 1, 12 million per Bitcoin, or scenario number 2, 7 million per Bitcoin? Or do you believe a lot higher or lower? I'm curious to hear your thoughts in the comments below. So again, here you see it all plotted out in this chart. Then the final scenario of Saylor's model is the following. So again, we start with a growth rate of 60%. Then the growth rate decays exponentially, starting with 10% per year. But then the growth rate starts to shrink with 4% every year. So the decline is less steep every single year. And if that scenario plays out, according to Saylor and his calculations, that should bring us to roughly $12.5 million per Bitcoin in the next 20 years. Now, of course, there's a lot of assumptions made in this chart and a lot of simplification. But still, it's important that when people share their price predictions, like Michael Saylor did, they also back it up with some kind of data or forecasting model. And these are the numbers that Saylor plugged into his model. All right, I want to also discuss this chart with you, because here on my screen you see a chart of the market capitalization of gold and Bitcoin in US dollars, in billions of US dollars. So gold is the golden surface area, and green is Bitcoin. Now we see that gold grew from an $8 trillion market cap to almost a $20 trillion market cap in the last last 10 years. And Bitcoin grew from practically nothing, $1 billion market cap, to a $2 trillion market cap. Now, you see a similarity between both. Both are increasing in value over time. Why? Because both Bitcoin and gold are seen as inflation hedges. In a world where central banks are printing infinite amounts of money, people want to find a way to protect themselves against that inflation, because they want to maintain their buying power. Basically, they don't want to become the victim of inflation. Instead, they want to use inflation to their advantage and to invest in really great assets that will go up in value as inflation goes up. And Bitcoin and gold have shown to be those safe haven assets. But in addition, I want to show you that right now, gold is a $20 trillion asset class, whereas Bitcoin is only a $2 trillion asset class. So if Bitcoin wants to compete, or is going to compete, or is going to become an equivalent to gold, it needs to do a 10x. So if it reaches the same market cap as gold, then the price will have to do with 10x. So right now, we're somewhere around 80,000, 90,000. Let's round it up. Let's say 100,000, all right? So if Bitcoin reaches the same level as gold, then its price will have to do with 10x, meaning that it won't be 100K per Bitcoin, but 1 million per Bitcoin. So that is if Bitcoin reaches the same level as gold today. And some analysts argue that, you know, Bitcoin will start to rival gold more and more. You need to take into account that gold has been a safe haven asset class for many decades, all right? Many wealthy people throughout history have invested in gold, and it has a very established name and reputation. But right now, the gold market is very heavily manipulated. Fort Knox doesn't really want to give off an audit, and China just discovered one of the biggest gold deposits in the world. And in addition, you know, gold is very impractical to save it, to transport it. And Bitcoin has many great properties similar to gold, but in many ways also much more easy. If you want to travel with, you know, hundreds of millions of Bitcoin, over hundreds of millions of dollars of Bitcoin with you, you can do that very easily because you can just put it on a ledger and you can put it in your pocket. But if you want to travel with hundreds of millions of dollars of gold, then you need armored transport, you need planes, you need guards, you know, it's going to become a very big, complicated and expensive operation. And because Bitcoin has such great properties, so mainly its scarcity, its limited supply of 21 million Bitcoin that will ever be in circulation, and all of the demand that is basically all of the demand that basically wants to buy up that Bitcoin. But there's just so much Bitcoin available. There's a very limited amount of Bitcoin available because right now everyone is seeing the future potential of Bitcoin. It's not like 5 or 6 or 7 years ago where Bitcoin didn't really have a great track record yet and people were still waiting for it to prove itself. Now it has proven itself. It has earned its stripes, and the institutional investors, which have billions and trillions under management, they are now gobbling up Bitcoin left and right, and soon there won't be enough Bitcoin for everyone to go around. Here you see another chart or another diagram. It's saying the Bitcoin spot ETFs have bought around 8,775 Bitcoin this week, while miners only mined 1,350 Bitcoin. So 3,150 Bitcoin. So what does that show? It shows that the Bitcoin ETFs, the institutions, are buying up more Bitcoin than new supply that is being released on the market. And this is just one market participant. We have the Bitcoin spot ETFs, we have pension funds, countries, we've got publicly traded companies. They're all buying up Bitcoin, and there isn't enough new supply that's hitting the market to satisfy all of that buying pressure. So over the long term, if this trend continues, then if this trend continues, this is not a guarantee, but what I think is most likely, if you look at demand and supply economics, that the price will probably skyrocket. Another important chart is the following. So Bitcoin long-term holders haven't stopped accumulating since February 2023. Relentless conviction. So here you see long-term holders. So the red lines are when long-term holders are selling, and the green lines are when long-term holders are buying. So long-term holders, which are probably the most educated investors because they have been around for 1 to 3 cycles already. They have gone through the process, they have learned it, they have held it, they've gone through the emotions, they have studied the asset, and they're accumulating right now. And that is a very important fact because that shows how the core believers in Bitcoin, the core investors, are accumulating and are holding right now. Here's another perspective, another chart from Coinmetrics. Here you see the Bitcoin supply percentage held by long-term holders. So here these different colors are the different waves of holders. But probably the most interesting one to look at is this green line, the 1 to 2 year holders. So the short-term holders, those are generally the ones that sell the fastest when the market dips. And they're like the tourists. They just come when the market is pumping and they leave when the market is dumping. But right now, around 70% of the supply is held by long-term holders. And that's important because those long-term holders are probably going to hodl. They understand the longer-term trajectory. They understand, like Saylor, that Bitcoin is dirt cheap right now and they just want to accumulate more and they don't want to sell. So all of those dynamics are really important to keep in mind. All right, hey, now that you've watched this video, I'm really curious to hear your thoughts. Do you believe that Michael Saylor's prediction, based on the financial model that I shared with you guys today and all of the supply and demand mechanics in the market right now, do you believe that $13 million per Bitcoin is a realistic price target, or do you think it's just a fluff number, a marketing number that Michael Saylor is using in order to raise as much Bitcoin, or in order to raise as much money on the debt market and the equity market as possible to just buy up more Bitcoin? All right, hey, and if you enjoyed watching this video, do me one quick favor, smash the like button. It will give me good feedback to understand if you like this video or not. And if you haven't yet subscribed to my my channel, also make sure to subscribe to my channel, because I'm going to be posting regular videos just like this one to help you to make sense of everything that's going on in the crypto market and to help you to position yourself for maximum profits. Thanks for watching. Peace out. Take care. And I will see you in the next one.